Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have about your subscription. Disclosures are very important. Please read them. I'm going to go through specific trade ideas, trade examples in a live account. So it's very important to understand the risk associated with trading stock or options. If this is the first time you see the screen, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own response level for general education information purposes only. Trading psychology is important, right? We're going to talk about that shortly, but let's get into the market first. So looking at the first our model, let's just look at our model. Basically, this is stock forecast toolbox. You can put, future symbols. You can put, ETFs, and it gives you different time range prediction for 1 hour, 10 days, 6 months. So 10-day prediction. One of the observation is that it's still in downtrend. So short-term signal is down. But the magnitude, right, the acceleration of the drop has significantly reduced, right? So we're still trading in a downtrend, but we're not driving, 200 miles an hour. We're driving maybe 20 miles an hour, right? As an analogy. So, but still downtrend. Model sees that, the recent highs 524, 550 is probably, at least for the next 10 days, is your overhead resistance. And, you should not be surprised if we do revisit the recent lows, right? That's what the model is telling you for the next 10 days. If you zoom out and look at the monthly predictions that are updated on the first of each month, right? A lot of people ask me why only on the first? Well, because the point of this model and data set is that each data point that feeds into the model is 1 month's worth of data, right? And it's been trained and learned. So before the Liberation Day, same idea, that the model turned bearish, not bearish, but neutral. So going into the month of April, model turned basically neutral, saying that 590 is the overhead resistance, 550 is your support. This was done on the 1st of April. Obviously, after the Liberation Day, or some people call it Annihilation Day, Free or 401k Day, and a bunch of other very interesting names. But after that day, after that Wednesday, we broke through the 550. We were at 480, right? 70 points below the predicted price, which is, I haven't seen that ever, right? As long as this model has been written for, now, I don't know, almost 20 years. This model been improved and rewritten and optimized. So I've never seen any kind of moves on that magnitude. But irrelevant, what the model is basically telling you that what used to be a support on April 1st is now overhead resistance. So market is going to have a hard time breaking through the 550 level, right, in the months of April. And obviously, even going into the Liberation Day, it was already neutral. So long-term trend now is basically turned negative, right? So long-term trend negative, short-term trend negative, medium-term negative, right? And extreme oversold conditions, and that's why we had a 10% rally on any positive news market rally, 10%. Delay in tariffs, even though tomorrow delay in tariffs might turn into not delay, right? Where the escalation starts again, but market doesn't care. It was so oversold that it bounced. So I agree with the model. I think short-term 550 is the overhead resistance. Not short-term, medium-term. Medium-term, it's the next couple of weeks. We need some kind of a positive catalyst. I think maybe I think it's going to be after the expiration. There's a lot of positioning in April 17th, but after April 17th, as earnings season unfolds, and assuming no liquidity issues in credit markets, this basis trade that everybody talks about, then I think we could break 550 to the upside, but not until towards the end of April. Meanwhile, I think we're trading in the range 550 to 480. So that's the model, right? Then if you look at the traditional technical analysis, I'm looking at 1 hour chart. After the delay by 90 days in tariffs, we closed the gap, the second gap, day 2 of Liberation Day. We still haven't closed the day 1. So there's a lot of I think one of the reasons is because this was the March lows, 550, and it's been a very strong support that became an overhead resistance based on the just model that I showed you. Right, so that makes sense. So this is the overhead resistance. If we get to 550, we got to it one time. We were here, if we get to it third time, right? If let's say we get to by end of the day, if we're at 540, let's say, bulls will try to close this gap as well, right? But I think for the next 10 days, or at least until next Friday, this is the sell zone, right? This is the resistance zone, right? If by end of the day we're at 500, right, 490, I think this is your support zone, right? With the short-term day trading, this is your, kind of level. And right now we're kind of, I don't know, in the middle of this zone. So that's my outlook, short-term, long-term. We haven't made new lows, right? The fact that we haven't made new lows in a week, it's a huge win for the bulls. Usually these are the signs of bottoming process. VIX jumps to 60, drops to 30, volume goes into historical moves, right? Biggest loss, biggest gain. All of these are signs of capitulation, but violent bottoming process that usually results to the upside, assuming there is no liquidity issues, right, or some kind of a black swan event. Nobody can predict black swan events. They're by definition black swan, but people always try to explain things, right? When dollar sells off, right, dollar is precipitously dropping below 100, right? It's trading at the COVID zone, right? During the COVID, we were at these levels, right? 2020. So we're trading right at the peak of COVID sell-off. And Treasury's also been underperforming. So people selling bonds, right? They're selling bonds, they're selling dollar, which usually are safety asset classes, right? Usually during COVID sell-off, global financial crisis, people turn their attention to the bonds and dollar. It didn't happen in 2022 because of the inflationary pressures. But more often during these recessions or sell-offs, that's the safe haven. And instead, people are aggressively pouring their money into, gold, and even gold miners catching, a pretty large bid. So that's traditional technical asset classes, and that's why this basis trading, right, that has been a headline news in the market. Right, and this is one of those very leveraged bets by a lot of institutions and hedge funds, 10 to 20 leverage. You buy treasury bonds in the cash market and you sell short treasury futures. You take that spread, right, and you do it many times, billions of dollars over and over again. People have been making money for it for a long time. But then if things don't go as expected, dollar drops, bonds sell off, well, then all of a sudden, when everybody's selling the bonds and everybody wanted to buy bonds, you can get these liquidation issues, right? And especially every time people say the word repo, right? Somebody said the word repo here, right? Repo facilities, this behind the curtains move between large banks and institutions and, Fed, and anytime repo market dries out, it's a concern. You can read up on history here, academic reflection, history of basis. I mean, this is not something that was developed yesterday, right? But it is very sensitive to these, liquidity issues. So assuming no liquidity issues, I think the bottoming process well under its way. But if you do see market making new lows, taking out this week lows right after these huge historical volumes, then most likely it will only be one of those black swan events where either a couple hedge funds go under, or a couple, some institutions go under, and something along those lines. All clear. All right. Any questions? So that's, support and resistance level. I would always go through these future rehearsal exercises. We do them in a live trading room always, right? That's kind of, we basically say, okay, 480, 560, right? This is the range we've been trading for the past 2 weeks, right? In the past 2 weeks, we've been trading between 560 and 480, right? Scenario number one in the next, I don't know, can't really talk about months. You have to talk about weeks, right? So in the next few weeks, scenario one, we're trading in this range. Scenario number two, earnings season is better than expected. JP Morgan did well. Delta Airline did well. Not well, but better than everybody feared. And we are retracing to highs, kind of replay of 2018, right? If you look at the 2018, that January through March price action, by May, June, we made new highs, right? We made new highs in 2018. So that's scenario number two. Scenario number three, global financial crisis. Right? We haven't had more than 30% pullback or 25% pullback. Global financial crisis, right? Lehman goes under, Bear Stearns goes under, people, banks, repo facility, illiquid, and Fed, is late to the game to rescue, and we have, 10, 20, 30% pullback. All right. So how many of you say one, Vlad? I cannot predict global financial crisis or black swan events. By definition, they're black swan. Not supposed to be able to predict them. You can prepare for them, but you can't predict the time. You cannot time them. We will have repeat of global financial crisis. There's no doubt about that. I just don't know, is it next 5 days, next 5 weeks, next 5 months, next 5 years? That I don't know. So, but maybe you do, or maybe somebody does. So then they would say, okay, Vlad, no, 3. Okay. So how many of you say 3? How many of you say 1? How many of you say 2? Joseph, 1. Anyone else? Okay. BJ, Joseph, Robert, Michael, Steve, TBC, Siren, Ed, welcome back. Okay. I go with 1. I'll go with the crowd. Majority of people say 1. I'm going to say 1. If you say 1, then basically, this is your sell zone, right? We had this week high was 550, right? So this is probably where you want to sell, right? If you said that, then 500 to 480 is probably somewhere you want to buy. And if we're in the middle of the zone, you basically flip a coin. By the end of the day, we could be at 550, or by the end of the day, we could be 500. With the current, VIX being at, usually it's impossible to move 5-10% in 2 days. But lately, with VIX at 60, right, we've seen this in COVID or global financial crisis. 5-10% move is kind of just something you can expect. All right. How do we help Tradespoon? We do have different models. So I've went over Stock Forecast Toolbox. I think this is very useful. 10-day horizon, 6 months horizon. You can type in NVIDIA, QQQ, and make analysis for any of these stocks or ETFs. The model will run and give you the answers. Company Screener, I think, is useful. It runs once a month, tells you, okay, going into this sell-off, what we used to outperform. You can clearly see insurance. Insurance has been one of the better services, the best probably sector. Some of the retail like TJX, Walmart, tobacco, right? Philip Morris. So you can see which stocks or which group of stocks have a strong momentum to the upside, right? Based on our model. So this is great. You can put your portfolio, right? It'll tell you support, resistance level, so you can create a watch list of your stocks that can help you with short-term predictions and long-term trends. So that's Stock Forecast Toolbox. I think this is great. The next great thing that I like is these models: Active Trader, Weekly Trader, Monthly Trader. Active Trader runs every day model, weekly and monthly, runs on Sundays, and basically gives you trade ideas. So today, trade idea was Walmart. So Walmart, and actually on yellow tunnel was TJX as well. But for whatever reason, TJX, right, despite all the fears of recession, are at all-time highs. I mean, don't ask me why, but it is, right? So, and model finds it, right? So, okay, especially it's overbought, but if it breaks above this level, then TJX is one of the ideas, bullish ideas. Walmart, for whatever reason, Walmart is doing much better, right? Fears of recession, discounted store. I mean, there's a lot of explanation I can find, but bottom line, trade what you see, and what the model sees, Walmart is an option and continues to make highs. So those signals are generated and stored in active trader every day, and you can watch them. You can see, okay, what was it yesterday? Also Walmart. Okay, so great. Right, so that's an opportunity that you can trade. We give you different support and resistance level. These are short-term aggressive trading, right? 1 day, 2 days, couple days. It gives you, I mean, I didn't change the code, 1% price fluctuation. Obviously, now 1% price fluctuation can happen every 2 minutes. So I would make it wider, maybe 4%, maybe 5% price fluctuation, right? Because these are geared toward day trading or short-term aggressive trading. But traditional is 1%, and don't risk everything. Put half of your position at 86.36 and put the other half at 85.95. If you're not comfortable trading stocks, you can always do the same thing with options, right? Same idea, 1% move in underlying stock. I would, for the current market, that's when VIX is at 20. When the VIX is at 60, okay, $3 move, right? So then, $1.40. Right, so instead of buying 87, instead of buying at 86.40, you can use weekly options and buy 85 call for $1.40. But still, you're looking for that 1% move. If VIX is at 20 or if VIX is at 60, you're looking for $3 move, $2 move. So that's active trader. Similar. Any questions on active trader? Any questions on stock forecast toolbox? Weekly trader is where I trade, longer term trade ideas. If you thinking about like, okay, which stocks are kind of doing better than the others, CNC, right? For whatever reason, CNC, one of the healthcare stocks, is doing better. So longer term, okay, they're not making any new lows, not affected by actually up after the Liberation Day. So for whatever reason, going into the earnings, it's doing well, building this bottom. If you think after earnings they do well, okay, this is an opportunity, right? And if you don't have exposure to healthcare, manage healthcare, okay, then CNC is another idea. So these are just idea generation based on our signals. Same thing with monthly trader. Right, same idea. You can trade stock, you can trade options. It gives you options idea. These are single options. You can do calendars, you can do spreads, you can alter these strike prices or setups. But the idea it's a bullish signal, right? Weekly is medium term. If you're thinking in weeks, if you're thinking months, then monthly trade. Any questions? I'm gonna go pretty fast, so this is your opportunity to ask questions. Okay. Then if you want to see what I trade, Elite Circle. So I encourage you to take advantage of Elite Circle. We have a morning bell and a closing bell. Keith and I managing these sessions during market open and close. My experience is technology, managing, building software and signals and trading tools for retail, for hedge funds. That's what I've been doing for the past longer than I wanted to admit, 30 years. That's my passion. But I've been fortunate to be part of few public offerings, so I manage my own money, and these tools help me to manage my money, and that's my experience. And then we have Keith from Options Hotline, and Keith, his background is market maker, trader on the floor in a hedge fund. So we bring a lot of good experience, right? Probably 50 years worth of experience or more of trading in global financial crisis, COVID, first administration, 2018, and that experience can help you. I think this is one of the biggest pluses, right? That if you have time to participate in live trading room, or you can watch the recordings, you're not trading alone, you're sharing ideas with people who've been trading in these times, and I think this is a lot of good value. Plus signals, plus you can actually see my trades, right? Today, JP Morgan, right? I'm doing calendar spreads. So this is more complicated, right? Where I'm taking advantage of, volatility skew. So I'm selling this Friday, buying next Friday, bought it for 42 cents, sold it for 60, right? 50% profit overnight. I do hedges, so spiders hedges, right? I close the spiders hedge because market is over, was oversold, and I still have half of the hedge. So it's a combination, or SH, right? I trimmed my SH position. Or I closed Morgan Stanley this week. So you can see it's a combination of stock trades, ETF trades, option trades, option spread trades, because we have different subscribers. Some people are more comfortable with stock, some people more options. That's why I say, okay, if you're not comfortable trading spiders, you can buy SH. If you're not comfortable trading option spreads, okay, you can buy stock, right? But that's the idea behind the Elite Circle. I encourage you to join. It's every day, morning closing bell. You can watch the recordings. You can enter your Discord email. You can enter your user ID. You can enter your phone number. You'll get text messages. And you have exposure to all my trades. If this is too much information and you just want options or option spreads, I would premium portfolio or spread portfolio, shadow portfolio. These are kind of a limited. If you want stock only, robo investor portfolio. And those are paid subscribers. Free content, please add info@tradespoon.com so you get our emails and our content. We get daily newsletters, my trade ideas, signals. We do have brief video that can help you navigate market volatility. We have a YouTube channel where we do live broadcasts on Wednesday of trading, so you can join that as well. We have a support. We encourage you to use our support, and different guides, getting started guide and learning center, where if you want to learn about technical analysis, we have lessons on technical analysis, webinars on options, basic trade management, portfolio management. There's a lot of free content. If you're looking for one-on-one help and you have time and financial commitment, I encourage you to start with one-on-one coaching. We do have one-on-one coaching. You can submit your information and one of our specialists will call you. Any questions so far? Andre, BJ, Carmen, welcome back. Chuck, Ed, James, Joseph, Michael, Robert. Okay. So just to summarize, trading psychology is important, right? Right now, you can see earnings doesn't matter. Delta Airlines, better than expected earnings, no forward guidance, stock up 20% when the market rallied, 10%, and then it gave up all of the gains when the market sold off. Same thing with JP Morgan, better than expected earnings. I mean, it's outperforming Wells Fargo because it missed some of the numbers, but they're going in the same direction. Maybe not one-to-one correlation, but highly correlated, right? So you do have to pay attention to earnings, like, maybe don't invest in Wells Fargo now, but JP Morgan is a better play. But, if JP Morgan is going to sell off, Wells Fargo is going to sell off. If JP Morgan is going to rally, Wells Fargo is going to rally too. So concentrate on things that are within your control, right? The economy of control. What's within your control, right? We want to avoid, right? We want to avoid making decisions based on emotions. One thing that I think is this positive negative visualization, and always have ample amount of cash. 30% I propose, if the market revisit the lows, you want to have at least 30% of your portfolio in cash. Look at the portfolio drawdowns, right? 4 positions, no more than 2.5%. Position is down 2.5%, doesn't matter what you think or what I think or what anybody thinks. You're down 2.5%, you exit, right? And you wait, see, and look for the next signal and get into the, forget about this position. Keep in mind there's self-serving bias, prospect theory, hindsight bias. There are a lot of, content that's very important to read, right? If homework, there are 2 books that I'm assigning. If you want to get better in dealing with emotional trading, if this is something is a challenge, and I think for the majority of the people, it's a challenge at some point of their career or at all points of their career. Thinking fast, thinking slow. Daniel Kahneman idea of system 1, system 2, that we make decision in 2 different modes, not just trading decisions, all decisions. So understand which part of your brain influences your trading decision, and at least being self-aware, documenting that, keeping a journal, I think is crucial. So thinking fast, thinking slow, and thinking in small bets, right? In bets, right? This is very important, right? Because trading, I mean, nobody wants to say that this is gambling, right? It's not gambling, nor is it, you know, it shouldn't be a gambler, nor is it a poker game or a chess game, but there are similarities between chess and trading and poker and trading and gambling and trading. So this is a great book. She's a PhD in psychology. She's a friend of Daniel Kahneman, and so that's something that I would do as a homework. Read these books, catch up on basis trading, and some of the consequences. And that's all I have for today. BJ, is US dollar decline near the end, or is it about to get worse? I think if we're going to have some companies go under, right, because of the scary trade, then I think it's a beginning. I would watch the 100 level, right? We haven't breached it in 25, 24, 23, 22, right? So we haven't breached this since the peak of the start of the sell-off. February 22 is when the last recession started. So from technical point of view, if we have a sharp pullback, below 100, if this 100 level doesn't hold, then obviously dollar is going lower. I mean, usually it's a good thing because the euro is going higher, right? And if euro is going higher, that's usually associated with the healthy global economy and the bull market. But it could be that because of the scale, this basis trade, it could get worse before it gets better. So it doesn't matter what I think, but what matters more is this chart, right? And we are very vulnerable setup for a dollar, very vulnerable, right? But it's wave A, or I mean, it looks like it's a straight line. You don't even have any reprieves, maybe for a couple of weeks. But if we trade below 100 next couple of weeks, then I don't know where the bottom is. 90, 88. All right, guys, you're awesome. Thank you very much for participating. Try, elite circle. Don't trade alone. Try one-on-one coaching. We were talking about this. In theory, the reality is that everybody kind of stops trading and starts subscribing during these 20% sell-off. But historically, since you guys are on these webinars, if you're still here, that means you're doing better than the majority of the people. This is opportunity, right? This is opportunity to kind of share the experience that Keith and I have, some of the strategies, and this is where you can, long term, if you have a longer term perspective, dust always settles, and then there are winners and losers, but these are opportunities, right? So in theory, you should do the opposite. This is the time to invest into education. It's a time to invest into subscription because these are opportunities that you might have to wait. We haven't had since 2008, right? Or since 2020. All right. Thank you very much and have a great day. Joseph, thank you. Andrei, BJ, Carmen, Chuck, Ed, Joseph, Michael, Robert, thank you a lot. Have a great weekend, guys.